Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. As far as what we're talking about today, a bit of a reversal from the other day. We were strong last night, weak this morning, so we'll kind of talk about that reversal, what it means for the week here, why we could be weak to start the week. We have a number of earnings on our radar as well. Under Armour, COTY, Marriott, AutoNation, Cardinal Health, Tesla's doing some weird things. We can talk about that. And would Amazon really buy AMC as is being reported in the Daily Mail? Probably not. We'll talk about that. Our guest today is Kenny Glick from hitthebid.com. He would join the show at 8:35 to give us his take on the markets. Now I'll go to Joel. Joel, give us a quick recap on this reversal here in the overnight
session. Not good here, Spencer. We got a lot of red on the screen here. We're trading down 32 handles at 28.9650. Strong follow through on Friday's close. We got up to 29.47 tonight. Last night, about 10 o'clock. That's up near your high close for the move at 29.41, and they pulled the rug out. We started selling off, and really not much of a bounce. We just came down and touched the interday low for Friday at 95.75 and trying to get back into 2,900 handles. So if you've been looking for a bounce to short here this morning, there hasn't been one as of yet. Gold in the red by 820 at 1705.80. Silver in the red too, 5.8 cents at 1572. Crude flat, 26.10 here, not bad range, 26.43 to 25.05, just bouncing around unchanged. And the old get to 10,000 and sell off trade, Bitcoin futures trading down $1,020. The halving taking place today. It looks like there's a halving plus 10% today as Bitcoin's down $1,000. The futures are down at 9,010. Let's bring in Triple D. Triple D, what are you seeing out there in the pre-market trading?
Seeing very weak stocks, clear rotation out of the winners, out of the stocks that have been leading here. Just looking, obviously from the last few days, you've seen a rally in all of the trash. That is going the opposite way here this morning. Kind of started a little bit Friday night. The airlines getting some bad news that UAL couldn't do that bond deal. They had upped the coupon, I believe, and they were offering 9%, then they went up to 11%, and they still couldn't get the deal done, and then they pulled the deal. So UAL struggling to raise money, and obviously I don't know if that means they're going to have to go to the bank or go to the Fed. I don't know the options here, but they struggled to do that bond deal, and it was going to be at extremely high interest rates too. So that spooked the airlines Friday night before the close, before the 8 o'clock close. All of the airlines were trading down. But then you had, an overnight rally here in the markets where I just buy the dip, and they were buying it up. And like you said last night, Joel, at 10 o'clock, we were actually up 20 handles. So we've had a 45-point sell-off from those highs. Trying to really locate what the catalyst for the sell-off is, and we've had some struggles to find it.
I think the amount of cases in South Korea, upticking a bit. They were supposed to be ahead of us, ahead of the curve, doing things the right way, and now you're seeing a surge of cases there. Also, Russia, I think near the Chinese border, seeing a surge in cases. So it was just a very quiet week. Don't have an update on all of the reopenings. I guess 47 of our states are in the process of reopening. Yeah. So I think it would have to be the South Korean. If I had to pick one thing, I'd have to say the South Korea.
It's not good news with New York City, and obviously a lot of kids. We've been talking about how the children haven't been getting sick, and all of a sudden they're looking like there's a linkage here. And I think there's 80 kids now in NYC, and I think 5 have passed away, unfortunately. very young. So I think, that starts to spook the market. I mean, if those trends start to continue, the market will get spooked again because the kids have been relatively safe, we thought. And now all of a sudden, even some of these kids that were, that they didn't even, have COVID at the time, are getting sick, and they have positive antibodies. So that means they were exposed to it. So there is some things to worry about here. There's always been some things to worry about. That's why I say I stay very, much in cash in my long-term portfolio, still sitting somewhere at 60 to 65% cash. Trading portfolio, I've been biased to the long side because it seems like we just continue to climb the wall of worry here. I came in relatively flat, although I'm looking, and a lot of my stocks are really getting beat up, where the indexes are down, but they're not down nearly as much as some of these stocks are. So it's still going to be a trader's market, buying the dips and selling the rips for a while here. Again, we're going to see how the reopening goes. There's people who are saying they think it could go okay. Then there's other people who are saying, well, we're just going to start getting reinfected again. I watched a doctor last night say that he thought, we're going to reopen for a few weeks, 4, 5, 6 weeks, and then have to be back in a lockdown because we are just trying to reopen it too soon. So obviously we know there's opinions both ways. We don't know who's going to be correct. I mean, logic from my perspective thinks that we're opening a little bit too soon too, but then you have other people on the other side of the fence that says we shouldn't have ever closed. So I'm not a doctor. I'm a stock trader. I'm going to trade what I see. And what I see here right now is a little bit of overnight weakness.
I don't know. We're getting a couple. I saw in the in one of the both of the chats, people asking about Berkshire Hathaway trading down this morning. I mean, I can't really find a point where I'd be comfortable buying this stock. Warren's not comfortable buying stock, so why should I buy his stock? Yeah, it did get a rebound with the market muted, just like all the financials has been selling off. I mean, if you feel like you need to own the thing and you want to, lean on that low of the move at 159.50, you can certainly do that. But it was solid, sold off with the market. Got a bounce, a muted bounce, and starting to just turn around. We know that the financials, in which Buffett basically is an ETF financial with other things thrown in there. I mean, just not a good looking chart. And maybe if he starts making some investments in the market, starts deploying some cash, maybe giving me a little bit more of a a positive outlook on it. But really, you look at it, you're giving back half of that move if you want to buy it, and lean on the lower that move in 159.50. That's the way I'm looking at it.
The one thing the market still has going for it is that there is a lot of people who are bearish, including we've been overall bearish. I mean, we're in a trader's market, and yes, we played it from the long side and the short side. I've been trading stocks around, but I still sit with a lot of cash, and there's a lot of money managers still sitting with a lot of cash that are looking to deploy that. So that's why when you get these dips, every money manager says, okay, I need to get out of some of this cash because I raised it, but I didn't get back in. And you look at some of these stocks and you think, okay, here's a dip. I'm gonna buy it, and that's why every single dip we keep getting bought here in the last couple of weeks. So I'm not sure when that ends. I'm not sure when we go from the buying of the dip to the selling of the just the selling of the rip. I think eventually there's going to be another crisis here. I really believe that, and that's why I'm going to continue to stay with cash. But you look at the next few weeks and you think, okay, well, we're going to reopen. Businesses are going to start to look better. You could see the next 3 to 4 weeks looking okay for the market. It's not like everybody's going to get infected on day one. So I have trouble shorting the market here, especially when we're down 25 handles. I'm not initiating shorts here. I don't want to be short this market, not right now.
A couple people in several chats have noted that a number of high-level officials in the White House have now gotten sick. That could be a factor here this morning. We're not saying it's not. I think that some of that news was as old as I think Thursday or Friday. But it did seem like maybe a couple more people in or around the inner circle of the White House have now. Stephen Miller's wife is sick, so he's quarantining. Mike Pence's his press secretary, the president's driver. So a number of people around the inner circle have now come down with the virus. So maybe that is weighing on things. I don't know.
There's a lot of things. Like there was all these worries have been there the whole time. The market has just shrugged them off. I mean, when it is completely, I tweeted out this week, we're completely disconnected from fundamentals. The market is completely disconnected. So it's trading just on FOMO. It's trading, it's not concerned about anything from fundamentals. I mean, when Uber can spike as much as it did on those numbers, you know you're disconnected from fundamentals. I mean, the sales are down 80% in April. They rallied 10% from those levels, meaning they're still down like 75%. And they buy the hell out of the stock. So it's over. The crisis is over. No, it's the numbers, you're just, when you're talking about, yeah, everybody can say, oh yeah, Uber's sales are up 10%. Where are they coming from? I mean, like you said, that company that had 98% of sales were down. Oh yeah, they had a little rally from the lows, but they're still down significantly here. So the market is completely disconnected from fundamentals. It has been. But how do you short it when, you're rallying on, really, it is bad news. So I can't come in here and say, I want to be short stocks, and this is the start of the sell-off, because once bitten, twice shy. I've tried to short a couple times into this rally, and still as day trades, I'm shorting stocks. I mean, as a swing trade, like back in January, I was actively short stocks, because I put on the puts, and I was shorting stocks, was buying puts, and actually flat out shorting stocks, because I thought, and I was early. I was 3 weeks early. I feel like if I come in here and short now, I feel like I'm 3 to 4 weeks early again, because I don't think the infection rates are just going to all start going sky high, unless this children thing, which is a wild card, starts to really spread. That'll spook the market very quickly. So I do think we got to give some weight to that too overnight. People coming in, and people are very protective of their children. Me is, that's what I talk about. It's the worst thing, sick kid, right? So that's a scary thought. We hope, obviously, for that it's just an anomaly and it's not something of a trend where we're going to start to see more and more kids get sick. But that spooks the market too. So lots of reasons for us to sell off on any given day. But what's the reason that we're not going to buy the dip? I mean, that's what the market continues to do.
Well, we got to talk about the news of the morning here. And the three of us tried to figure out why Amazon would buy AMC. Hopefully our educated chat can shed some light on this, but Spencer, go ahead with the headline.
Yeah, this is from the Daily Mail, which I don't believe is a source we've
What
ever
is that?
cited.
Is that the Toronto newspaper?
No,
that's the
Daily
Globe.
On.
No,
Don't
come on,
pick
Joe.
on the Canadians.
No, Daily Mail is a British tabloid.
Okay,
so I do
same
not
thing.
believe I do not believe we've ever cited them on this show before. They're basically the New York Post, but for Britain.
Okay.
And they said
So they got
that,
some followers. They got some readers.
yeah. They said that Amazon has had talks about potentially taking over AMC.
I think, in my opinion, just my opinion, I think there is zero chance of this. Sorry, AMC shareholders. I know, you guys have had it rough. So the stock obviously has been in the gutter, but you're getting a 64% pop here this morning on a rumor that Amazon wants to buy a movie theater. I cannot fathom why. I didn't read the article. I read the headline, immediately dismissed it. So I didn't bother reading the article. Maybe there's some reason that they're going to cite. Obviously, there's probably some good reasons in the article. They've tried to think something up. I think there is next to zero chance of Amazon buying AMC, and I would not be surprised if Amazon dismisses this rumor.
Have they
quickly.
said anything yet?
Obviously not, because the stock keeps going up.
Yeah.
So it's going up. It's the hope trade. Oh yeah, it's so cheap. Why wouldn't you buy a movie theater? Well, maybe because it's cheap for a reason. And why is Amazon, unless you were joking that they're going to turn them into storage facilities?
Yes.
I don't see why they do that. So anyways, they did buy Whole Foods. They have bought physical brick and mortar before. It has happened, but I didn't know Amazon wanted to get in the movie theater business.
There is no explanation or idea as far as what Amazon would do with the theaters. It basically it's one sentence of news, and then the rest of the article is just background. So I don't know. We don't know what they
gift pop, in my opinion. I believe this is a gift. It's my opinion, just my opinion. I'm not telling you to go trade on or anything. I'm just saying it's $7 here right now. If Amazon says it's confirmed or something, but even at that, okay, the thing's up 67% on a rumor. What kind of premium do you think they're going to get? I mean, it's up 74% as I'm talking here more. This is a poster child for what this market is right now. Trading on hope. And AMC trading on hope here right now that Amazon's going to come to the rescue of their business, which was in trouble before COVID even started. I mean, look at the long-term chart of AMC. $35 back in 2017, $15 back in 2018. kind of had a 2018 that was kind of flat, and 2019 was straight down the whole entire year. Then we have COVID, and again, this was a business, COVID kind of AMC teetering on the edge, COVID trying to push it off the cliff. It's come back with all the trash rally, and now it gets this hope trade. I'd be a seller. I would sell this thing if I owned it, but that's my opinion. I'm not going to show it. What if there's something to it? But
yeah, the market is running with this, and the thing
it wants to have hope. It wants to, like, the market wants. It's like, go back and just think about the situation that we're in. People want to hear that the virus is going away and we can reopen safely. Everybody wants to go back to the way life was before. The market wants us to go back to the way life was before. The market's trying to price in that hope, trying to find the silver lining in the awful unemployment data. It's delusional, because we're not going right back to the way we were. It's not like we're going to be in a month. In a month, COVID's gone. We're all good to go. Like, I went out this weekend. Did you go out this weekend? There's people outside having a good time. I saw one. I went by, like, a neighborhood party. There's like 12 people sitting outside just talking, their lawn chairs. I'm sure there's 12 people living in that house. People are just, like, done with the social distancing. At least in Windsor, Ontario, it appeared to me that people are done with it. They're like, think it's safe now. We did our social distance. We did our part. We did it for a month. Now we're ready to go back to our normal way of life. I don't think it's going to work like that. I think people are going to go back to the normal way of life, and it's going to turn around and bite us in the ass. And I hope I'm wrong. I want to be wrong. I wanted to be wrong in January. I want to be wrong now. But I'm going to stay in a lot of cash because I don't think this thing's over.
Moving up as we talk, 80%, 737. Like I said, maybe they're baking some premium in this, even if the deal does get done. Are they going to pay up for it? A lot of believers in this. 5 million shares have traded. Play it from the long side, but I'll tell you, if they decide, they come out and they say no. I'm just a little surprised that Amazon has not come out and and squash this rumor. We just hit 7.
Well, when did it come out, though? What time? They don't come out instantly and respond to. Amazon has better things to do with their probably time than worry about some article in the Daily Post.
Daily Mail. Come on.
Daily Mail. Sorry, we called it the New York Post. That's what got me confused.
The article was published at 5:31 Eastern time.
Okay.
So,
unless they're turning them into storage facilities, they need more storage. I don't see them operating a movie theater. I don't see Amazon coming in and operating a movie theater. I don't see it.
I mean, one thing about the movie theaters, if anything, the seating capacity, will be changed, at least in the interim, right? Look what they're doing at Disney World. But
look at the gift. And a good point, Joel, you're making. We are back to where we were in February right now, before this whole crisis started. We're above where we were when the crisis started for a movie theater. Holy. A lot of people buying on hope this morning. I won't be.
Cinemark.
Not this stock.
Yeah, no real sympathy there. That's trading down 13 cents at $14. So we'll see. Maybe we'll actually get some news during the show here. Hopefully we will. That'd be fun to quote that. But anyways, S&Ps went down to 93, 28.93. Now, first meaningful bounce here in quite some time. Trying to get back over 2,900. We'll see. Our close was way up there at 29.2850, and they even goosed the futures after the 4:15 close. So climbing back up right now. Mid-range. Yep, climbing the wall worry. But we'll throw it back here to Mr. Israel, and we'll let you take over with some more issues to cover.
We can go to the earnings. Let's go to Under Armour here. There aren't that many earnings this morning, but there are a couple that interest us. Under Armour reported a Q1 adjusted EPS of a 34-cent loss per share versus a 21-cent loss estimate on sales of $930 million. That was above the $895 million estimate. So they beat on the sales, but missed badly on the earnings. And the bar is low, and they're being punished, I guess, for not.
You know why they're being punished? Because they reported on Monday morning and not Friday morning. If they would have reported on Friday morning, the stock would probably be up 20% because everybody wanted to buy stocks Friday morning. I believe it was Friday morning that we were up significantly. Now, they're nervous this morning. Report on the wrong day. So market's taking profits here this morning. They're nervous. They're like, this stock's missing. I'm selling it too. That's the mentality. We're so short-term nature here right now. So they're taking profits in the trash, and they're selling stocks. So that's this morning. So tomorrow might be different, but that's what they're doing today. Under Armour simply reported on the wrong day.
Under Armour has been a dog for a long time. So
For sure.
yeah, I mean, there's really not much to say positive about the stock. It's been in a decline even before we had the sell-off in the market. Made a low, rebounded to $10. That is the wall here until we get back over 10, close over 10. I could see not buying the stock on strength. Drifting lower here this morning. The low of the move is down at 660. I don't think it has enough gas to get there today. But just trading lower, I see some daily lows, 830, 840 area. There's a couple there. So if you're looking for a scalp, but 3-day low is 809. I just, I don't know, can't see rushing out to buy this issue.
I tell you, some of your best trades are your losing ones, right? I bought this one at 23 something, and I sold at 21 something, and boy, am I glad I did that, because I saved myself a world of pain.
Yeah, I know.
By cutting my losses there. All right, what else we got on the list here? Let's go to Marriott here. MAR. They reported this morning as well. Q1 EPS 26 cents versus a 91 cent estimate. Sales of 4.68 billion versus 4.27 billion. So a big above estimates on the sales, but a bigger earnings miss as you would expect for a hotel.
Who's staying in hotels? I mean, who's traveling? I mean,
I'll say it again. They reported on the wrong day. Spinner's calling me out for it and saying it's not the case. I will tell you that, okay, yeah, maybe I exaggerate, wouldn't have been up 20% on but what I'm saying is the sentiment matters more than the reports. Sentiment right now matters. And right now, today, they are taking profits and selling stocks. These same reports were a lot of trash last week too. People were looking, at certain reports. I mean, Uber, for crying out loud, was a horrible report. They bought the hell out of it. It all matters. It really does matter. Sentiment matters just more than anything right now. And the sentiment changes day to day. Right now, they're taking profits. So if you're reporting and you're a trash name today, you're probably not going to rally on it. So it can completely change. This is my opinion. Obviously, these are just my opinions.
Correct.
I've traded profitably for 21 consecutive years, and I haven't had a losing month in 20 years. That's the truth. At Bright Trading, I haven't had a losing month in 20 years. So I'm just giving you my opinions from a profitable trader.
Yeah.
I might be wrong, but what I'm saying is I trade on sentiment all the time. And when I see right now in this market, when I see the stocks getting whacked, and you see a stock lift a little bit on the report this morning, a lot of times they turn around because the day is trading down. It's a crazy market and sounds stupid. It works. And you'll see stocks that have good reports get hit because the overall picture that day is ugly. So all of these stocks have had bad reports. The retailers have had a lot of bad reports. Some of the other hotels were rallying last week on pretty bad reports. So the numbers sometimes don't even matter. Yeah, the numbers were a disaster. Of course they were a disaster. They've been a disaster for every hotel stock. But Hilton was last week, and it was doing okay for a bit on it. I mean, who else? There was another hotel that reported last week.
Did Hyatt report last week? I can't remember. I know Marriott Vacations reported, but
anyways, the point I'm trying to make is
Hyatt did report.
Sentiment is choppy. It doesn't just, we're bullish, we're bearish. It's been a choppy sentiment market here, at least from a day trading perspective, for a month. We've been selling, and that's why I keep saying, selling rips and buying dips. Fading moves has paid and paid and paid again. And yeah, we're trending higher still. But if you've been selling, the times we're up 500 points and buying the times we're down 500 points, you're making money a lot more often than you're losing it. Sentiment matters.
If you're looking for good news on Marriott, the CEO did point to China and noted that occupancy rates that were in the single digits in February rose to about 25% in April. So again, if you're really looking for good news in Marriott, there is some. I guess
I just look at like the overcapacity. I mean, and Spencer, you know our area, right? I mean, how many hotels have popped up there on 12 Mile, in this area, and they're just all these new places are being bought, are being built. I mean, kind of like hand in hand with the airline industry. I just think there's so much oversupply here, but anyways, we're just looking at this stock pulling back. I have no interest in looking at this one long term or short term. I will tell you though that there's some profit taking going on in AMC here. I don't know if there's any news related to it or not. But someone just hit a button here after it hit 755. We have just lost. We're back under $7 here, so I'm not too sure what has turned, but you are seeing some profit taking here in AMC, back under $7.
Keep
All right.
going.
Yep, let's keep going down the earnings list here. There's a few more.
I've had a great weekend here.
I wanted to get to AutoNation, COTY, and Cardinal Health. Let's do AutoNation here. Their report was actually pretty good, if I recall. Yeah, it was. 91 cent EPS versus a 69-cent estimate. Sales 4.66 billion, which is above the $4.61 billion estimate. So a beat and a beat for AutoNation.
How the hell did they do that? I guess January and February were pretty good.
Well, it's the same. Yeah. You get two every quarter that we look at the numbers. This is Groundhog Day around here. Every quarter, you've got 10 good weeks. There's only was 2 bad weeks in the first quarter. So the numbers could be fine for a lot of these companies coming in. Unless, you've been these dogs that were struggling before. Looking at first quarter earnings and expecting them to be crap is delusional too, because we had 10 out of the 12 were good weeks. It's what's happening now. It was the same thing with the Uber report or Lyft. You remember Lyft? And they were like, oh, the earnings weren't that bad, and they're buying the hell out of the stock. Because it's from the first quarter. It was 10 normal weeks in there. So it's not like all of a sudden, that everything is good here because Lyft, and Lyft wasn't even that great. Well, but yeah, the sales were okay at Lyft. That's why they bought it, because 950, I just brought up the report. The sales beat. But we know the sales have fallen off a cliff now. So, but this market again, last week we were finding the silver lining. Today we're nervous for whatever reason. It's going to change. It's going to change. Sentiment changes all the time. And people are asking, what sentiment report are you reading? I'm just telling, as a day trader, sentiment's always shifting. You see the market, it goes in waves. Like the trading goes in waves. Right now, we're down. We're weak. We're down. You can see it in the indices. But we could turn around and start buying the dip, and then it starts to get positive again. It affects my mood too. I mean, it affects my mood. It affects, my nervousness. I see the market's down 1,000 points, and you start to think, is this thing turning ugly again? I mean, as traders, the markets affect our opinion on the virus, which is nuts, really, because the markets are just all over the place. But you can't help it. Like, do you feel the same way, Joel, when you look at the indices and you see the market up 1,000 points? Do you feel a little bit safer out there?
Yeah,
as a trader, for whatever reason, you kind of do. It's weird.
Yeah. No, I mean, the market is a forward-looking mechanism, and it's very hard because what the market is forecasting now, it's hard, it's hard to fathom that, that's going to be correct with everything that's going on. So you want to believe the market, and you definitely, I agree with that sentiment when, when it's down, when the futures were up last night, I was thinking, man, I just can't believe it. After this jobs number, after the unemployment, and, Barron's comes out with, 20.5 million jobs. It's just the disconnect is there. But, from the day-to-day trading of the markets, you just got to, like you said, sentiment and read what's in front of you. And today you want to bounce, you don't want to short this thing in the hole. You're doing that old last week and you got ran over. Now
you've been run over. It's such a good point. You've been run over every time. You've been selling when we're down 300 Dow points and buying when we're up 300 Dow points. You've been losing money in the last month. Yeah, you get a day of follow through maybe, but overall it has paid to fade. It has paid to fade most of these moves. That's a good one. Paid to fade. It's not always the case. Sometimes you get in a trendy market like we were remember in January when you just couldn't buy a down day. The trend was your friend from like November till the end of January for 3 months in there. Every dip they bought, and they were not selling the rips. They just kept going higher and higher and higher. And we had that move from like 295 SPY up to the 338. We know that was a huge move in 2.5 months. And then obviously COVID came and changed everything. But at that, you got to trade the market that's in front of you. This is not a trendy market right now. It's a kind of a chop market. So you have to be able to adjust as traders. To stay in this business, you've got to adjust. If you're always just following trend, but the trend is now turned to chop, you're going to get chopped up. You're going to be like, oh, I think the stock's breaking out. Oh, no. Okay, I'm wrong. It's pulling back. And I think it's breaking down. I'm going to short it. Uh-oh, no, it's going back up. So you got to identify. The first thing you do as a trader is try to identify what are the markets doing overall. And the last month, we've been chopping around. So that makes me biased to fade moves. It makes me feel safer to fade moves. What I mean is fading moves is a stock is rallying, I'm selling it. If a stock is falling, I'm buying it. And those are short-term trades. It's nothing to do with my long-term investment portfolio, which I talk about too. I wear 2 different hats on the show for you guys. And obviously we know my long-term investment portfolio still has a lot of cash. My trading portfolio has just been bouncing around, selling rips, buying dips. And that's how, my March was my best month in 10 years. My April was my second best month in 10 years. The reason, because I identify these trends in sentiment. Obviously volatility higher is going to help me too. But, I identify that we're in a choppy market, and buying dips and selling rips has worked. And, I was saying it a month ago, it's still working. So I'm looking at this morning and not saying, oh, which stocks can I sell here this morning? No, the selling opportunity was last night at 10 o'clock, or the selling opportunity was on Friday. So now it's like, okay, we could pull back for a day or two here, get to the 50% retracement of the most recent move, say 287, 286. But I'm not selling down here either when we just sold off 45, 50 handles from where we were at 10 o'clock last night.
All right, S&P's still down under 2,900, trying to catch a bid. Crude now in the green by 30 cents. I guess maybe Saudi's made some favorable comments. 2 minutes, we have everyone's favorite guest, Kenny Glick of Hit the Bid. He'll be joining us, telling us what's on his radar, what he's looking at short-term and long-term. Spencer, we didn't have much earnings. We talked about some ratings. Not a lot of bullish rating changes this morning. Kind of more, I kind of saw more downgrades than upgrades.
A little more. Not a lot of big upgrade. No really big upgrades to speak of here this morning that I'm seeing, at least. As far as down, maybe Carnival catching an upgrade at HSBC to buy. That's interesting. But I really don't see anything else as far as upgrades. And as far as downgrades, there's really not a lot worth noting either.
Lyft got downgraded.
Yeah, okay. Lyft downgraded Stiefel to hold. Glue Mobile downgraded to equal weight at Morgan Stanley, and I guess Redfin down in Susquehanna to neutral. But like nothing really that jumps out to me as being notable.
You sneak out of that Glue Mobile, Dennis, or you still holding?
No, that's a long-term portfolio. I'm holding that.
Okay, yeah, nice move on Friday. Carnival's getting an upgrade, but it's trading in the red here. So market sentiment dictating the direction for. Also, you look
risk off day.
Yeah, you look at this Carnival cruise chart, and I mean it's consolidating here too long for me near the bottom. They're gonna need some good bookings here in August.
It sounded like they were getting them. This is the crazy thing, is that there was like, Norwegian was saying they're getting good bookings, and then there was a report here over the weekend that Carnival had sold out their ship for August.
I saw that. That was total BS. I saw that.
Yeah, tell us about that, because I only read the headline.
Was it a rowboat? They sold out a rowboat?
It was, first of all, it was from like a travel industry, like a trade publication. Which
somebody with a conflict of interest?
a little bit. And the report was that there was a surge in bookings like week over week.
1 to 3?
That's what I've been saying. That's how these companies are BSing us.
No, I'm sorry. It was here it is. Bookings spiked 600% compared to the previous 3 days. The previous 3 days.
And they spiked 600%. So yeah, did you know? Yeah, if you have bookings of 10 and they go up to 16, that's a 60% spike. So if you have bookings of 10 and they go up to 60, well, there's a 500% spike for you. So, I mean, this is the same thing. Like when we were talking about, Uber, the Uber report, and what was said in the conference call. And they said, yeah, sales are down 80%, but we've seen a nice, pop off the lows here of 14%. But you're still down 75%. And the market spins this and thinks this is good news? Yeah. Do you guys not take grade 2 math? It's still down significantly here. But anyways, the market participants obviously didn't do grade 2 math because they bought the hell out of that Uber report.
Wait, Kenny, don't leave us. Kenny, we're live with Kenny Glick.
There he is.
HitTheBid.com. Kenny, what's up?
Kenny goes with the flow. He's probably buying Uber. Are you the one buying Uber and Lyft? He probably is because he goes with the flow.
Hey, what's up? This thing on?
Well, I've lost
my ability to use this video chat thing. Ma, you're way too close to the camera, Ma. Ma, you don't have to go near the microphone.
I can actually see inside your
What
people.
pants do you have on?
These are my Snoopy Christmas pants.
Those are awesome.
It's my trading smock.
He comes dressed.
What's going on, boys? How you holding up?
We're just ranting. That's all we do is rant.
Yeah, I've heard you say like every topic that you should be talking about. The market's disconnected from reality, which what I was wondering is when hasn't it been? Since I started this business, 1982, from 1959 to 1982, I think is when the market made sense because it went absolutely nowhere. And then suddenly Schwab made it more accessible to people to trade. And then it became obviously more speculative and then it would crash. And then the advent of online trading and all that. It's a casino. And it's never been connected to reality. And everything you've said so far this morning has been spot on because the way I trade is this market. I live in the world of delusion and delusion. I call the market the matrix. None of it's going to make sense. And that's just what I've been thriving and teaching people this entire time that just accept what you see and trade what we do. And the VWAP has been working phenomenally. We're just trading, gap up on earnings reports, just looking to fade. You got stocks like Wayfair, which was $22, and they're coming into earnings at 160, yet they're tacking on another 25 in the pre-market. You got to look to sell, but even the selling, you got an 8 or 9 point sell off, and the next day it's up to another 12 or 15 points. So you can't really base anything in reality, which is fantastic for me because that's where I live. But this market has been, again, this is the most insane thing I've seen in a long, long time. We were positioning ourselves, my dad and I, he's the only one that, hangs on to stocks. I'm more of a liquidity trader. When we bought the QQQ back, we thought, well, maybe 3 to 5 years we'll be back to around 225. And we're there 20 days later. So what are you supposed to do? When you buy an overstock as a goof at $3, maybe you'll get back to 5 and it goes to 17. Or you're buying yourself some Halliburton under 5, thinking, maybe it goes back to 750 on a bounce. Next thing, that's up 100%. You're supposed to take profits here, but when you do, next thing you know, your stock goes up another 100%. So the only way to stay sane for me is liquidity. And a day like this, I came in today looking at when I went to sleep, the futures were open. And I saw at 4:00 in the morning, we started to sell off. I was waiting for a day like this because this is the kind of day I like to trade. Gap up, fade the gap. And then usually my day is over by 11 o'clock anyway. So the middle of the day doesn't matter. But like you've been saying, you can't stay short because at the end of the day, we're probably green no matter what the news is.
Yeah, I know. I'm scared. I've been punished trying to short stocks. I'm like, you know what? It burned me. Why am I going to continue to go on a trade that I continue to lose money with? So, on these flow, I tried to short Wayfair a couple times on the way up. I was like, this isn't working. I'm like, I don't gonna short this thing anymore.
No way. Yeah. The only thing that's kept me, long is the fact that UVXY, and the reason I have the beard, this is the UVXY beard, I'm not shaving until UVXY rallies 3 days in a row. And it just doesn't happen. So we're back. What's changed? Nothing's changed. I never left the house too much anyway. If there was sports, nothing's going on right now that's any different in my life. I'm a reclusive weirdo anyway. I go out for a concert, I come back to my hovel. But now you've got no sports and no concerts, and I got nobody to get drunk with. So that's the only thing that's different for me. But this market really, nothing's really changed, except this time the buying opportunity was even more enormous than anything we've ever seen in the history of trading, I think.
Buy the dip. Buy the dips worked for a decade. It really worked in March. As good as it's ever worked. I wish I would have been buying more stocks.
And the funny thing is that, I've held on to a bunch of stocks in this last move up, right? And I always sell before the earnings come out because nothing ever works out for me when earnings are coming out. So if I'm in a profit, I'll sell into it. But if your stock sold off onto earnings, you should never look at that stock ever again. I'm talking about AAOI, another one of these crappy stocks that I bought because it went to $5, and you got this massive move into earnings. But of course, this one, again, I didn't own it into the report, but of course, this one decides it wants to sell off on an earnings report as if earnings suddenly matter. So that's the kind of stock I will never look at ever again now. If you want to think fundamentals count, you're barred from my life right now. I want stocks that make no sense. I want stocks that go up all the time and that don't have any footing in reality at all, like Tesla and space and VTIQ, baby. Come on, they're revolutionizing the trucking world.
Wait, what's that one? I don't know that one. What's that one? Give us
VTIQ? Oh, get in right now. Hurry.
Hurry. VTIQ.
Yeah, Victor Tom Indigo Q. I don't know. My buddy tells me they're a disruptor in the something. So I bought it because it broke 15. I was like, I don't care what the story is. It looks, if it consolidated, it broke 15. I'm in. It's going to 20. That's really what it came down to. But he loves the story. I don't exactly know the whole story. Apparently, they acquired some other company that does hydrogen-powered rigs, and it's going to change the landscape of trucking in the world. If that's the case, fantastic. All I care about is that it broke 15 and now it's at 18.
It just get another leg down here, folks. Just through the lows of the session. 29, 28, 90, 75. I don't know if we had any news come out on that. So this is a tough one though, Kenny, because the same thing, like you were, last night I put my orders in to buy a lower open and then, try and sell on some strength when we were already up overnight. I canceled those orders, didn't have any shorts out there, but man, on a day like this, I mean, what are you looking to buy the dip in? Because looks like we're getting a pretty nice dip here off the open. What's on your buy the dip radar?
Well, first thing I always do is I look at who reported earnings. Sure. If you got a dip on an earnings report and that stock starts to consolidate, again, it's all technicals. I'm not even reading the story. I like when a story has positive headlines, but the stock is the opposite gap. That gives me more opportunity. So I haven't even looked into what's going on yet. I just saw the cues were already reversed. My plan today was I thought Friday and the way the VIX crashed and the market just ripped into the close, I thought we would get a gap and then today would be some selling. So we already got the move that I was looking forward to.
I know. I hate that.
Yeah. So I'm just, I have my VTIQ position on. I got some other position. I was thinking about taking some off today. It sucks that I'm gonna have to do it, with a little bit of a gap down. But some of these stocks are up, like I said, 100%, and that's for in a month's time.
What about Twilio?
I look right at who reported. I look at the gaps. That's why I like you guys. You're always talking about earnings reports. So if I find a stock that has good headlines and the stock's gapped down, that's what I look to buy. If it's bad headlines and the stock is gapped up, I look to fade it, or basically looking to play the fade. The fade is the trade. The fade is the trade, and the bird is the word. Bird.
Do you know who that song was based on?
The bird is the word. I don't know.
Big Bird.
The bird.
Is it really?
I don't know.
No.
Who's it based on?
Come on, Dennis. You should know this.
The guy, the basketball player.
1952.
Baseball player.
Yeah, the bird guy. He 30 wins in a season. Somebody.
Yeah.
Yeah.
Dennis, you know Mark the Bird Fidrich, right?
There you go. Yeah.
Before my time.
Oh no! Come on, he was great. Used to talk to the ball. It was incredible. Yeah, that was a long time ago. What about Twilio? Talk to me about Twilio here.
I don't know anything about that stock, but I do know that Kramer said you better be cautious about it, and then it went up 70 points. So just letting no one's getting anything.
Well, he said
right
on
now.
Friday though that he was the one that he's been telling you to go long this thing. So
no, he's quoted. I was reading some of the news stories, and he says they cater to the small business. The small business is collapsing right now. He'd be very cautious on Twilio. That's all I know about. I don't even know what that company does, except for that. When I see the symbol, I think of this club in the city, Twilo. So if you want to go partying, I remember there was a club called Twilio, I don't know nothing about that stock except it's one of those that has gone up 120 points without me. So add it to the list.
And you all over this Amazon AMC news?
I heard you guys talking about it, but it's just a rumor, right? Why would anybody want to buy a movie theater right now? I mean, that's going to be one of the last to come back. But of course, buy all you can because that's what's going on right now. So buy your airlines, buy your cruise ships. And my parents are already looking to book 2 cruises. They don't care. They don't care. And I think one of the parts I wanted to say, obviously I was listening to you guys, the market influences how we feel about the virus, how we feel about society. So if the market's going up, I feel we won again. Bring on the murder hornets. You can't mess with us because the Dow is at 24,000. We win again. So until something else comes along that scares the living hell out of us, then we have to stay with what the trend is right now, and we're ignoring everything because we have no sports. we have no sports. How can we be good when there's no sports? There's no sports. I'm losing my mind here. My kid's freaking out every night, but the market goes up. So it's like, I want to be in a good mood. I'm trying to explain to my kids, but the market's up, kids. Everything's all right. I know you can't go to college right now, but it's all right. The market's up, right? So it's incredible. It's screwing with my psychology. And again, even though I've lived this life of, believing that this is a casino and the matrix and just trying to do what the market tells me to do, it's real hard to stay focused on reality.
Are we getting sports back? I mean, we got the UFC on the weekend. Are we going to start getting sports back? Is baseball season going to start? Are we going to get the NBA playoffs and the NHL playoffs? Are we going to get sports back? What's the Kenny Glick prediction there?
Listen, any sport would be good. I heard everyone's watching Korean baseball. I mean, I will watch anything right now. We should invent our own sport. What was the movie where Silence of the Lambs, where they have cockroach races? We should be doing that right now. I don't know. That's what's hard for me to grasp this market. How are we ignoring everything more than ever? If there's ever been a time to be based in some sort of reality and rational thought, it would be now. But we've completely just broke from reality. But the question is, do we have any kind of rational thought and reality creep back into this market? Like today, is it, like he was saying, is this the beginning of a move down where reality sets back in? We'll know by the end of the day, and then it'll be a new trend. So that's the way I've been living right now. And again, I'm in not that many stocks as usual, but got the Halliburton, that's been phenomenal. This VTIQ, even US Steel, obviously the QQQ has been a great one. I've been shorting SQQ because that's a cheap way of playing the Qs that always go up. But really just looking for the next opportunity, and I'm with you guys, just playing the fade, looking for earnings reports with and going the opposite way of the gap at the open.
Kenny, you're in Central Jersey. Are things starting to reopen up around you, or what?
We still have we have a Target on my corner, and that's been open the whole time. So for us, we've had the supermarket, and up until 3 weeks ago, it was pretty easy to get in there. We didn't have any lines, but now we've got our line to get in there. But you cannot go to a lot of things. We went to visit one of the restaurants we took out from the restaurant. So the restaurants are still closed, which is still sad. You can't go to, I like shooting guns and stuff, and you can't go to the range right now.
Well, I saw beaches are open, are starting to open, right?
Yeah, to some extent, but we'll see. I'm like I said, the market has influenced the way that I feel about the virus. So if the market's going up every day, I feel like maybe the worst is over. Let's start venturing out of our caves and whatnot. I went to visit. I went to visit my mom yesterday. I drove to Brooklyn. We didn't, hug and kiss and all that. We stayed our distance, had our little lawn chairs out in the backyard. But it's crazy. I'm waiting for other people to be the guinea pig, more or less, and we'll see how it pans out. And we'll see. Again, like I said, I've been reclusive by nature before this. So you give me the okay, I'll be not leading the charge, but I'll be right there behind the guy leading the charge because I don't want to be the first guinea pig.
All right, Kenny Glick, his site is hitthebid.com. Kenny, we always appreciate your insights and your musings. So thanks for the time, and
hey,
have a good one. Be safe.
You guys too, man. Be
All
good,
right.
and
thanks, Kenny.
God bless everybody.
All
Cheers,
right.
Kenny. Say hi to Bob for me.
All right, 8:51 here. About 10 minutes left in our show. How are we looking out there, Joel? Still fading?
We had that
Still
little
leaking?
spike down to 89.75, and nothing there, folks. Just a level, the bot spot a little bit there at 28.90, trying to push it up higher, but really not much positive here going on yet this morning. Mid-range on the session seems so far away. That's 29.1850. I kind of like to see us float up to there. We'll see if that happens or not. I don't know what's going on in AMC, but we hit 750. Now we're back under $7. Cinemark kind of woke up on this news. It was flat when we started the show. Cinemark is up 57 cents here. So we'll see any news from Amazon regarding that. We'll certainly dictate the price of those two issues. We had some other stuff traded in the red. Did we talk about Tesla at all?
No,
though?
I was about to go there, actually.
Our daily Tesla. Elon got out on that Twitter again, huh?
Yeah, I was going to go there. I don't actually know, to be honest, what Tesla's deal is, if they're going to reopen their factory this week in California or if they're not going to reopen. I think they plan on reopening, but they're also suing the local county government for preventing it. So I have no idea what's happening with that, with the Fremont facility. He's threatened to move production to Nevada and Texas. I don't know what's going on. I have no idea what's going on.
That can't be quite so easy to do that.
No.
He's full on this virus thing. Like obviously he's talked, and we know what his position is on it. That open everything up. He's said it, specifically there, and he's voicing his opinion in harder ways here now. When you're threatening to move facilities here because they're not allowing you to open up. I don't know. He's really voicing his opinion. I disagree with his opinion, but is what it is.
It's trading down here, $23 at $796.17. You're still not at the low. There's a couple lows to contend with here. Yeah, not even at Friday's low. Friday's low, 787, and then the other lows from Thursday, 772. The real important level to me, though, would be 762. Pair of lows on Tuesday and Wednesday, 762.18, 761.11. The whole thing about him selling all his possessions and homes and everything. I mean, I don't know. I guess that can't be construed as a good thing, but
the guy's a genius, but he's out there. I mean, he tweeted on the weekend. He tweeted on the weekend about, that human language will not exist in 5 years. I have no idea what that means.
He's the guy who is like,
what does that mean? We're not going to speak. We're just going to talk in computers. Like, we're all going to become cyborgs, and Skynet's going to take over and run us. I don't know what that means when you say human language isn't going to exist or whatever it was. When they say human language, I don't have the tweet in front of me, but basically said human language isn't going to exist in 5 years. I mean, he's out there.
Elon.
I'll take the other side of that bet, Elon.
Elon's the guy in your
Dennis
high school
will still be talking in
is,
5 years.
You won't shut me up, Elon.
Can't shut Dennis up. I was going to say that Elon is the guy in your high school who was like really good at like one subject and then thought he was really good at all subjects, but really it was just the one subject, like math or science. He was really good at that and not much else. Socially awkward guy. That's my analogy for what Elon Musk is. He's a genius when it comes to engineering, and he's a visionary, but he's definitely out there.
I guess that was an article from The Independent. It was Elon Musk predicts that human language will be obsolete in as few as 5 years.
Okay.
That's interesting. Interesting thoughts.
All right. Are we flying into safety in makeup this morning? Because COTY is catching a bid. They have a couple different headlines here. The first is
what do we got?
They have earnings, but beyond the earnings report, they're also getting a bit of a cash infusion. So KKR is investing $750 million via convertible preferred equity investment. They're also spending up to $3 billion on COTY's professional beauty and retail hair businesses.
Cash is king here right now. And this is where a fundamental headline does matter. When you get these beat up businesses and they get cash, they usually rally on them, at least if the terms aren't, if it's not dilutive and the terms are okay, they obviously are going to rally on that. So we know a lot of retail businesses strapped for cash right now, getting, $750 million from KKR, even though it's convertible preferred. They just want, they're worried about these businesses not having enough cash to survive. So anytime you get some cash, buys them some more time.
Once again, this is taking a positive outlook on things that, people, I just don't want to say ladies, people that are wearing makeup are going to be going back to the offices and meetings, and that stuff will be necessary. Whereas when you're on a camera,
people wear makeups on camera though. They're on TV.
Yeah, if they're on TV,
even on the Zoom meetings. And on Zoom meetings, I bet you they're getting some makeup still.
Some they probably don't need as much though.
Maybe not.
But COTY had a nice spike in this. Got over $6 on that initial news. $6.26, back under $6 now. Let's look at the range from yesterday. The range from Friday. We're above. We're gapping up here. I just don't know. I mean, I'm just not real excited. Definitely not buying this one up. 55 cents. Long consolidation period. Very good support, just under $5. Be more interested there. And you haven't traded into 6 handle since April. The end of April, you had a pair of highs at 620 and 636. So I think you get back over 6, see some sellers coincide with that pre-market high. That pre-market high, as I said, 626. S&Ps getting off the ground here. 28.94. We're 4 handles off that low of the
imbalances aren't that bad. So if you're looking at opening imbalances as an indicator here, I see a few buy imbalances. Pfizer, which is trading the green, 174,000 shares to buy. You are seeing pharmaceutical stocks holding up fairly well. You can see the clear rotation when you bring them all up, and I have like 200 S&P stocks on my screen. When you bring them all up here, you can see the clear rotation into defensives here this morning. Because Walmart's trading in the green. You got some of the food stocks trading in the green. Colgate, CL just went green here. I mean, those are light trading volume, but you can see the clear move to defensive. Clorox is trading in the green. So, and then pharmaceuticals, like I said. So, and then you're seeing the risk assets like the airlines getting hammered here this morning. Obviously, UAL headline was the catalyst there from Friday night. The banks are getting hit hard here again. You can see a clear rotation still from that it's a risk-off day. With that being said, the imbalances are not like, whoa, there's some huge sell imbalances here. So don't be surprised if we start to lift here on the market, as it looks like some of these stocks might not open down as much as you think they might. So obviously a lot can happen. Still 32 minutes for institutional orders to come in here. But when I'm looking at the imbalances at this point in time, like ExxonMobil, for instance, 237,000 to buy in ExxonMobil. That is why it is only trading down 0.48% here when you're seeing a lot of oil stocks get hit, because there's a big buyer here at the open. That could make the stock, close open potentially green. CRM is another one. 71,000 shares to buy in CRM. So I know it is trading down $1 here in the pre-market, but as of right now, it's looking like there's some buyers here potentially at the open. And don't be surprised if CRM starts to lift towards the open.
A number of offerings and other dilutive measures happening, or just fundraising happening this morning. Penn National Gaming announced a $250 million common stock offering and $250 million convertible note offering. Equinix announces a $1.25 billion common stock offering. Virgin Galactic disclosed an agreement with Credit Suisse to sell up to 25 million shares. Yeti announced an offering of 1.5 million shares. So a number of offerings. Dexcom announced a proposed offering of $850 million in convertible senior notes. So a lot of companies raising some cash this morning.
They need to. Again, the stock market, even though me and Kenny are saying we're completely disconnected, and we are disconnected at most times, the companies themselves are not disconnected from the economy, and the companies themselves need to raise some cash.
Yeah.
They know the situation that they're in. There's a lot of businesses and a lot of companies, despite the stocks coming back, a lot of these companies are still struggling significantly. So until we get, back to normal, which we don't know when that's going to be, you're going to see this trend. You're going to see less buybacks, and you're going to see companies doing dilutive actions like doing offerings to raise cash, and that brings down the stock. So, you got to be aware. If you're in something that's really weak and the chart's looking great, they do something that's dilutive, the stock could pull back for a couple of days and maybe get hit on it. So it matters. The companies do matter, even though the stocks aren't pricing in a lot of this stuff right now.
All right, David Keller, before we go, he wants us to talk about oil here just real quickly, the DBO and the USL, and you could throw in the USO in there. I don't know what to say, David. I mean, they got hit. They're hanging out near the lows of the move. They're consolidating. I mean, you could see, if you feel like oil is going to make a big turnaround, this is all tied. We have the supply. It's so clear of the supply that we have out there. And where is the demand? And it's just the same old scenario. So I'm looking at all these charts, the DBO, the USL, USO. Downtrends before this thing happened, downtrends now, made new lows for the moves, not much of a bounce. I don't know. You have an out if you're buying it here. If you're buying these instruments, and we've talked about it, you're looking for, all the lockdowns, everyone to get back to normal, everyone driving the same, air travel the same, trucking the same. And right now, I can't forecast that. So I can't really dig into the all the, fundamentals of these things. But, Dennis, can you be bullish oil here? Until things turn around.
I've been bearish oil for years, so I'm not getting bullish oil here now. Yeah, it's had a nice, we've rallied, and you can trade anything from the long side. And like Kenny was saying, Halliburton's been a nice rally off the lows here. It's $10 though. Really putting it in perspective, a lot of these companies haven't come back. Do we see all of a sudden a resurgence? You can have a little rally in oil still because the reopening's coming. People are going to have to start, going out there again. And that's good for the oil companies. Good, if there's going to be cars on the road, if there's going to be more people flying, that's going to help. But I still think you're so far away from getting back to normal that it's hard for me to come in here and buy XOP now at $53, $54 when it's gotten half the losses back. So a lot of these oil companies have come back. I tend to think that if you're a longer term investor, I'd use the strength to lighten up in those sectors, because I do believe longer term oil companies remain weak.
All right, that'll be a wrap for today's show. I want to thank our guest, Kenny Glick. Thanks to all of you in our chats, all three of them now, the chat on premarket.benzinga.com, the chat on our YouTube channel, and the chat on Benzinga Pro. Speaking of Benzinga Pro, to get a free trial and subsequent discount, click on the link in the description of this YouTube video. The link is in there. That'll get you a free 2-week trial and then a discount should you choose to sign up. You can catch a replay of this show on our YouTube channel or catch a podcast on whatever podcast platform you prefer. Please remember, all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Joel and I will be back with you at 3:40. In the meantime, everyone have a great rest of your Monday morning and be safe wherever you are.